Hello, everybody. Episode number one after my almost 10-month retreat, I believe. That was the last time I published anything on here, which is pretty wild, actually. And I'm really excited to be back at this, and I can't wait to continue to share more valuable information with you. Now, because I hear a little bird told me at least that YouTube and everybody else is starting to crack down on people giving financial advice on the internet without being a licensed advisor, which makes sense. I mean, most people on here, you listen to them, they're pretty much telling you trades to get into. And I'm not here to do that because, really, if you're going to make it in this game, you need to figure out how to find your own trades. The things that I'm going to talk about are like more news related, and what I will say is that with a lot of these algorithms that run today, they're out there scanning the news. They also do scan prices, obviously. Primarily the S&P futures is the one that you'd think that has the most algorithm kind of activity going on. But they do have algos that track the news. So when Donald Trump came out with, we're going to put the tariffs on China now on the 15th. Okay. So they're not canceling the tariffs. Like they may have said, they may not have said. I don't really care what they said in the past because if you follow any of this trade war kind of thing, it really doesn't matter what they said in the past. It matters what comes out in the news, and it matters how the market perceives it. So with the tariffs being back on now on the 15th, the S&P futures have been under some pressure. We've dropped from the highs around, I believe we got close to 3150. I don't think we actually tagged it. We were up there. We were pretty close. We got down as low as 3052 on the S&P futures. The futures got a little bit lower than the SPX by a handful of points. They're pretty close though. And excuse me. A little bit of a cold. It gets a little cold down here in Florida, by the way, for those of you who don't know. So after we got down to that level today, they did come up and do some buying after being down nearly 40 points on the S&P futures. They brought them back up about 20 points off the lows, which is actually okay. Some people might think that that's a little bit bullish. I used to be under that same mindset where if they're buying it into the close, there's a good chance they're going to open it higher tomorrow. I don't think that's the case here. Especially with this kind of news item, especially with the fact that the S&P has just continued going up day after day after day after day. We had the VIX going below 12, so everybody was just getting way too comfortable. And there's just a lot of longs that need to get rubbed out here. And now's the perfect time to do that. And really, in my opinion, I mean, with the Federal Reserve just buying debt left, right, and center, it's clear that they're willing to be very accommodative to this market. I don't think this thing's over. I mean, I'm not going to tell you where to buy. All I'm saying is that I think there's a pretty good chance that we're going to keep going higher. And now it just seems like a great opportunity to either, pick something up, whatever it is that you trade. I don't know what it is that you trade. Sell puts, put spreads, buy futures, whatever it is that you like to do. I like to do both personally because I don't trade more than a handful of products at a time, so I like to be diversified in strategy. And for those of you out there that trade options, that selling premium gives you a pretty high probability of winning, and it gives you a little bit of wiggle room, especially when you have all this volatility to the downside. You're up 20 points, down 20 points, down 40 points, up 20 points. It gives you that little bit of a cushion. And when volatility pops, you have the option prices, especially in the puts, going way up above where they'd normally be, especially in the kind of scenario where the market rallies for nearly 2 months in a row. And so really it's a pretty good opportunity to get in there and sell some premium. And I would far prefer to sell premium, but if you can't make any money selling premium because there's none out there, then yeah, I buy premium. Now, am I not going to be buying calls down there at my set area that I like in the S&P? Of course I am, because I'm not only short premium, I also like to be long premium because that's where you make all the money. Selling premium's great, but it really limits your upside. And if you don't have a really large account, number one, I don't think you can really handle the risk. That's why I don't trade naked options. I don't sell naked premium. I'd probably stick with a put spread. I wouldn't go very wide either. I like my risk to reward to be in my favor. I can't really sacrifice the risk to reward for the higher probability of success that you get with the naked options, but that's something that maybe in the future would be a great opportunity. So I'd probably go about half and half, at least me personally. With my circumstance, I would go 50-50, the kind of numbers that I work with. Now, in my opinion, the bigger accounts, yeah, I'd probably do more short premium. The smaller accounts, maybe more long premium. Once again, it's a matter of preference, it's a matter of goals, and these kind of goals and these kind of risk tolerances are things that you should figure out before you start doing this, so that you have a plan and you know what you're going to do, you know what your risk is, you know where your targets are, so you're not thinking about this after, oh, well, I just sold a 10 lot of naked puts in the S&P and now this thing's going against me. You want to have all that figured out so that you're not questioning anything. So along the lines of Asia, because I probably will be doing a lot of these videos in the evening, and Asia sometimes, not always, it's not perfect, but sometimes what's going on in the Asia session can give us kind of an idea of what they're going to be doing to the U.S. As of right now, they're hammering the Nikkei down 1.25%, down 292 at 23,087 on the Nikkei out of Japan. The Shanghai Composite, you're looking at a loss of 0.41% or 11.8 points. On the Hang Seng, which is Hong Kong, 1.25 down, and you're looking at 332 points at a whopping 26,059 points. That's 2 China indexes and 1 Japanese index. So they're really hitting the Asian stocks hard tonight, which is great for me. You can probably figure out why that's good for me. Long puts, use your imagination. Along the lines of bonds, we have, they just took away, Japanese yields are falling. It's like German yields are not open until earlier in the morning, but they fell today. It says here that U.S. 10-year yield is higher. I believe that's after hours. The CNBC app. I don't really follow the CNBC app. I don't follow any of that stuff. I just look at the bond futures because they trade all night long, and /ZN is the 10-year treasury. You can get that on TradingView. /ZB is the 30-year bond. And if you remember the correlation between bonds and yields, when bond prices are going up, yields are falling. And yes, it is one of those ludicrous things about finance that sometimes it's just better to just accept it for how it is and just move on. Yields drop, bond prices go higher. Gold has actually been rallying a little bit. Gold had kind of fallen out of bed for some time after that pretty massive rally that we had. As the S&P started to rally, a little bit of that fear was taken out of the market. Gold dropped off. It went down to around 1460, I believe. I don't trade gold. I use gold as kind of just an idea to get get in my head of what's going on every day. So if we see gold coming up, we see the bond futures coming up, we see the yen futures coming up, and the S&P is flat or maybe slightly higher, usually that gives you kind of a good idea that, oh, maybe they might sell the S&Ps off, but that's not a 100% indicator. I don't rely on correlations ever to figure out what the S&P is going to do, because they're not always right, and you can have an S&P rally for 2 to 3 weeks with heavy bond buying, with heavy gold buying, with heavy yen buying before you actually get a pullback. So that's why, at least in my opinion, unless you have something else that works for you, I think that it's good to use correlations, kind of like you'd use something like an RSI or stochastics. They're just buttering the toast. You know, you already have a nice piece of rye toast sitting there waiting for you to, get your dippy eggs going in there. You just put a little butter on there and it just makes it a lot better. That's how I use correlations. That's what I think is the best way to use them. But like I said, if you have something that works for you, go for it. Yeah, CNBC. I think for the next one, I'll just go straight off of futures quotes in the evening. I apologize for that. A little bit interrupted. Sometimes the telephone rings exactly when you don't want it to ring. Along the lines of crude oil, coming up 43 cents. OPEC supposedly is talking about production cuts now, which we'll see how far that goes. Oil's just been trapped in a range for quite some time. It really hasn't gone anywhere, so I mean, it's really hard to say that it really has a huge impact on the stock market right now. And until oil breaks above about $59, I mean, I think it's just going to stay there for a while, which is good. I personally, I like my gas prices to be low. Living in Florida, everything's far away. Down here, there's no such thing as going to the gas station 5 or 10 minutes away. Everything is 20 minutes away. Everything is 30 minutes away, just because of the way everything's laid out here. Natural gas, has really been a disappointment this year, because usually about this time of year, we're in December now. Last year, the big natural gas rally started in November. We didn't really have a big move in natural gas. It started early, I believe. That would have been in August. We had a pretty good rally off of like the lower $2 area, all the way up to close to $3, I believe about $2.80. And then it sold off range bound, then it actually broke down and got hit pretty hard. So at least as of right now, we have not had the natural gas rally that we like to see this time of year. For me, that was one of my biggest winners last year, was natural gas. And that was actually a thing that drove me into the profit. Not that I had a massive profit last year, but that was one of the reasons that I ended the year in the green, was natural gas. And we're sitting at 246 front month contract. I would believe that CNBC gives you the front month. The front month is just the futures contract that is trading right now, because you have, depending on which contract, you have either monthly expirations or quarterly expirations, and I believe natural gas would be monthly. On to the currency market. We have the euro 110. Yeah, the euro rallied pretty hard. When all the tariff noise came out, they hit the dollar pretty hard. The euro went up, I believe, almost 50 pips that day, it's a pretty good move. In terms of the euro, I get a little thrown off because I watched the yen futures, which are quoted as how many yen it takes to see. It's weird, because the quote that you get most places when you're talking about yen prices is US dollars versus Japanese yen, whereas in the futures, it's the inverse. So in US dollar versus yen, that's how many yen it takes to buy a dollar. And then the futures price is how many dollars it takes to buy the yen. So it's a little weird. So when you're used to looking at the futures, which are, 1 yen is worth less than a penny, and then you see 108 up there, you think, okay, so, did something just happen here, or what's going on? Now, because it's 108 yen for $1 versus less than 1 penny for 1 yen. So it gets a little messed up. The pound, I don't really care about the pound. Yeah, and honestly, the yen's really the only currency that I focus on because I don't care to focus on too many different assets because you kind of lose focus. And that's something that perhaps I'll talk about in the next one to make it make a little bit more sense. Yeah, Asia is extending its declines. Goodbye, Nikkei. And I think that's about all I got for you today. We'll see this week, by the end of the week, if these S&Ps turn around. I'm looking at a certain area. We'll just say, you know what? I'll just go ahead and say it. If YouTube doesn't like it, that's okay. Around 30.25 on the S&P. We still have around about 70 points to get there, which it's not uncommon to see a 200-point sell-off in 1 week in the S&P, especially when there's trade tariff problems. So until the next time, good luck trading out there from Naples, Florida. This is Naples Vice, aka Vincent Freese. Happy trading.